While you were sleeping on January 19, 2026, something extraordinary happened. Silver just hit $94.56 per ounce. For an asset trading under $24 2 years ago, that's a 294% surge. But here's the terrifying part. Bank of America is now projecting silver could reach $135 to $300 per ounce in the coming months. And after you hear what I'm about to reveal, you'll understand why those numbers aren't just possible, they're probable. Because what's happening right now isn't just a market rally, it's a complete restructuring of global power, and the single largest wealth transfer from the unprepared to the prepared that we'll witness in our lifetimes. Welcome back. If this is your first time here, subscribe and hit that notification bell. This information gets suppressed everywhere else. Now, let's get into why January 19, 2026 will be remembered as the day the silver market finally broke free. To understand what's happening, you need to grasp something fundamental. Silver isn't just a precious metal or industrial commodity. It's the bridge between monetary assets and technological civilization. And that dual identity is precisely why this explosion is so dramatic. Let me walk you through the geopolitical setup. On January 15th, Trump announced sweeping tariffs on European imports over Greenland territorial claims. Yes, Greenland, which holds 25% of the world's rare earth elements and massive uranium deposits. The EU retaliated, and within 72 hours, global trade tensions reached levels not seen since the 1930s. But those tariffs aren't about trade. They're about controlling the supply chains for AI, quantum computing, military hardware, and green energy. And every single one requires massive amounts of silver. Then on January 17th, the US announced a complete naval blockade of Venezuela. Oil spiked 8%. But what analysts missed, Venezuela holds major gold reserves. And this blockade removes a seller from the precious metals market just as demand explodes. Reduced supply, surging demand, do the math. And on January 18th, leaked intelligence confirmed US military preparations for strikes on Iranian nuclear facilities. Iran threatened to close the Strait of Hormuz, through which 21% of global oil passes. Brent crude hit $95 per barrel. Gold jumped 3.2% to $2,847. But silver went parabolic, surging 7.8% in 24 hours to $94.56. Now, ask yourself, why would silver outperform gold during a crisis? Gold is the traditional sit. So why is silver suddenly outpacing the king of metals? The answer: the AI resource wars. According to the Silver Institute, global industrial demand hit 578 million ounces in 2025, up 11% from the previous year. The driver: AI infrastructure. Every AI data center, advanced semiconductor, solar panel, EV charging station, they all require silver. A single AI server farm can consume 50,000 to 250,000 ounces. Microsoft alone announced 17 new AI data centers by 2027. Gigafactories will consume over 12 million ounces annually by 2028. Solar panel production requires 85 to 100 million ounces yearly. But here's the catastrophic problem: there isn't enough silver. Global mine production in 2025 was 822 million ounces. Total demand exceeded 1.1 billion ounces. That's a 280 million ounce deficit in 1 year, and it's been growing since 2021. The COMEX reported commercial inventories of just 267 million ounces as of January 2026. That's 3.2 months of global industrial demand. 3 months. If even 10% of institutional money moved into physical silver, the entire supply would be absorbed in weeks. And here's the real story: the paper silver market. For every ounce of physical silver in vaults, there are 250 to 400 paper claims through futures, ETFs, and unallocated accounts. The price you see isn't determined by physical supply and demand. It's determined by leveraged bets from banks who never take delivery. It's fractional reserve fraud. But when geopolitical tensions spike, people stop wanting paper promises. They want physical metal. And when that transition begins, when the paper market cracks and physical premiums explode, you get a short squeeze that will make GameStop look like nothing. Let's talk history. In 1979, during the Iranian Revolution and Soviet invasion of Afghanistan, silver went from $6 to $50 in 12 months. 733% gain. In 2011, during the Arab Spring and European debt crisis, silver surged from $18 to $49 in 6 months. Both occurred during extreme geopolitical instability combined with currency debasement concerns. Now, look at today. The Federal Reserve faces unprecedented political pressure from Trump to cut rates and restart quantitative easing. Leaked memos from December 2025 showed White House officials discussing more accommodative monetary policy. Translation: money printers and governments always choose debasement over economic pain. The M2 money supply expanded 42% between 2020 and 2023, yet we're told inflation is under control at 2.5%. Have your grocery bills gone down? No. The inflation channeled into asset stocks, real estate, commodities, with another wave of monetary expansion coming. That inflation is about to go parabolic. Silver isn't just a signal, it's a mathematical inevitability. When you combine surging industrial demand, structural supply deficits, geopolitical chaos, currency debasement, and a leveraged paper market, the only possible outcome is a price explosion. Bank of America's $135 to $300 forecast isn't optimistic, it's conservative. But here's the terrifying part. The Middle East is escalating faster than people realize. Defense analysts estimate a 60% probability of US-Iran confrontation in the next 90 days. If that happens, if we see strikes, if the Strait of Hormuz gets mined, we're not talking about $135, we're talking $200, $250, even $300 per ounce. The posts on X, discussions on Facebook, Reddit threads, investors are connecting the dots. Greenland for rare earths, Venezuela to control oil and eliminate a gold seller, Iran to dominate Middle Eastern energy, Taiwan for semiconductors. Every move is about resources, and silver sits at the intersection of all of them. I've been watching Reddit. Wall Street Silver. Our silver bug sentiment has shifted dramatically. Coin dealers are reporting premiums of $8 to $12 over spot just to get physical metal. Some dealers are completely sold out with wait times into March. This is how it begins. First premiums spike, then shortages appear, and finally, paper price catches up to physical reality. So what do you do? First, if you don't own physical silver, get some. Not paper ETFs like SLV. Physical coins and bars you can hold. Start with whatever you can afford. Second, if you already own silver, hold the line. Don't panic sell during volatility. Third, stick with bullion American Eagles, Canadian Maple Leafs, Austrian Philharmonics. Fourth, dollar cost average. Don't time the bottom perfectly, and ask yourself, in a world where governments print trillions, where geopolitical tensions escalate, where future technologies require a metal and structural deficit, where the paper market is leveraged hundreds to one, do you really want to hold cash? Do you trust the institutions that failed in 2008, printed unlimited money in 2020, and now sacrifice independence for politics? The wealth transfer is happening right now. While pension funds load up on worthless bonds, while retail chases meme stocks, while people are distracted by social media, informed individuals are quietly accumulating real assets: silver, gold, productive land, hard commodities. History shows that in every monetary crisis, wealth flows from paper holders to real asset holders. Weimar Germany, Roman Empire collapse, 1970s stagflation. It's happening again. Silver hit $94.56 on January 19, 2026. That's documented fact. The question is, where does it go from here? And will you be positioned when it reaches $135, $200, or beyond? This channel gives you information the mainstream won't touch. Subscribe, hit that like button, and comment below. Are you stacking silver, waiting for a pullback? I want to hear from you. The game is rigged, but it's not unwinnable. The wealth transfer is accelerating, but you can choose which side you're on. Stay informed, stay prepared, stay stacked. I'll see you in the next one.